Hi there, I'm Irk, and this is my channel, Get Irked. In this episode, is Logitech the arms dealer of the esports industry, or just another maker of mice and keyboards? In this episode, I wanted to talk about Logitech, ticker symbol LOGI. Logitech is the maker of all things peripheral, whether you're talking about computers, PlayStations, Xbox, or even your cell phone. Logitech makes something that you're probably already using. Just in my office, my webcam, my microphone, my keyboard, my mouse, all of my gaming peripherals, my headset are all made by Logitech. If you don't have a very high opinion of Logitech, it could be because they have an extremely widespread range of products. So if you've had experience with a cheaper model, you may have been soured on the taste of this brand. However, if you can start putting real money into your peripherals, you'll see that Logitech has a reputation that is very well earned. In fact, it is the best in breed in the space when you're talking about esports and peripherals. And while Logitech does have competitors like Corsair Gaming, who's also excellent, Logitech has a very long track record and has excellent management and innovative products that makes it the leader in the space and the best long-term investment. In this video, we're going to look at the fundamentals. I'm going to create a buying plan of what I would do if I didn't already hold a position, and then I'll go over my own position, which I've held for quite some time, and show you where I stand right now. Logitech has a market cap of more than $14 billion and is an extremely profitable company. In its last quarter, it had an earnings per share of $5.42, which gives this company a 15.67 PE ratio, which makes it extremely fairly valued for just a normal company. But if you're talking about a high-tech growth company where a 30 value is considered reasonable, this is seriously undervalued. Another rare part of Logitech is that it does pay a dividend. It pays 95 cents per share per year, which works out to 1.12%. And when you're in an environment of high-growth tech stocks, almost none of which pays a dividend, and those who do have very small yields, Logitech's 1% plus yield makes it a very tempting long-term investment. Logitech was a market darling for 2020 and 2021, with the work from home experience and thesis playing out in a big way. However, as you'll see on the charts, through no fault of its own, Logitech has fallen out of favor as a market darling, has dropped nearly 50% from its highs in 2021 alone. Given that nothing has changed in the company itself, the fundamentals are still excellent, that makes Logitech a really interesting long-term play, both on esports, but also the work from home environment, which is likely not going to change. Let's take a look at Logitech on a chart. As you can see, Logitech has lost more than 45% of its value just in 2021 alone, dropping from its all-time high of $140.17 and not finding support until its recent low at $76.70. So from here, let's use Fibonacci retracement and draw a low from the pandemic all the way to its all-time high and create some levels where we'd be able to start a position in this stock. You can see that this Fibonacci retracement is relatively accurate, although it does miss on the 23.6% retracement. It does get really close to finding exact support at 38.2% and then 50%. Currently, we're just under the 50% retracement line. For me, I'd start my position in Logitech probably here at $82.41, and I would start with a 50% allocation, saving 50% to buy in 5 stages on the way down of 10% each. Depending on how aggressive you might want to be, this might be a good point to do your second buy down here at $76.70. In order to find additional buys, we do need to zoom out on the chart, and you can see that there was a lot of support down here around these areas, and I'd be more likely to use this one here at $67.88 as my third buy. From here, you can see that Logitech took a bit of a staircase climb over here in the past, which gives it a harder time to be able to find levels. So let's switch to the weekly chart and see what we can see when it comes to key levels where it pulled back and found support. And you can see this level here at $61.66 might make for an interesting fourth buy. After that, I'd move a little bit lower and probably use the close of this week here down at $46.70 as my fifth buy. And for my final buy, it gets a little bit tricky. You can see that we've had support down here. You can see that there's also decent support at the close of this week here. But if you look back in the past, because there was such a strong pullback down here in the pandemic, I'd probably use this point at $35.70 as my last buy. Although that target does represent nearly a 75% sell-off from Logitech's all-time high, so I think it's extremely unlikely that we'll ever see prices in the 30s again. Although if you are a long-term watcher of this channel, you know what I'm about to say. I always prefer to have cash on the sidelines and have a position grow into its full allocation rather than buy a full allocation. I don't want something unexpected to happen, have the stock sell off, and me have absolutely no cash on the sidelines to put to work at good levels. So from here, let's take a look at my own position in Logitech. I'll show you where I've come from and where I'm headed from here. I made my first buy in Logitech back on November 11th at $24.20 a share. I've been a user of their products since the early 1990s and really liked the company. In addition, I also liked the dividend yield, so I thought it would be a good place to start a position. Since that's more than 5 years ago, we're not going to track the play-by-play from there into the pandemic. We're just going to fast forward to right before the pandemic so we can see what I've done since then. Before the pandemic had started, my position had a per share cost of $31.72, so obviously I was trying to buy up my cost basis by adding to the position above where my per share cost was. Logitech is one of those positions that's taught me not to buy up my cost basis, as you'll see in a second, with its all-time high at the time at $48.83. During the pandemic, Logitech really sold off, hitting a low down here at $31.37. That represents a sell-off of nearly 36% from where Logitech was before the pandemic sell-off started. As you'll see, I was very busy buying Logitech on its way down, with my first buy on February 3rd at $44.91. My second buy was on February 18th at $42.55. My third buy was March 11th at $37.45. I made a fifth buy on March 12th at $34.47. And then on March 16th, I got incredibly lucky and made my last buy exactly at the bottom at $31.37. And this left me with a per share cost of $32.78. You'll notice that's actually higher than my pre-pandemic cost basis of $31.72, and that's because I bought it up on the way down. Fortunately, it was from this point that Logitech bottomed, and it just started heading higher from there. Since I was so overweight in Logitech at this point, I wasted no time starting to take profits out of the position to lower my per share cost down. I made my first sell pretty early on March 19th at $40.24, which lowered my per share cost to $32.25. I made a second sell on May 5th at $48.50, lowering my per share cost to $31. A third sell on May 19th at $55.35, which lowered my per share cost to $30.23. A fourth sale on May 29th at $59.45, lowering my per share cost to $29.27. A fifth sell on June 16th at $60.63, lowering my per share cost down to $28.75. Another on June 30th at $64.98, lowering my per share cost to $28.13. And yet another on July 31st at $73.24, which lowered my per share cost to $26.65. And note, this is still higher than when I originally bought the position in 2016. From here, I decided to let Logitech run for a little while, since we had seen the work from home thesis working so well for many stocks in the sector, and I decided I wanted to take my hands off for a little while to give it some price action. When Logitech dipped down from $70 around into the mid-60s, I decided in September on the 30th to take some more profits at $78.25 and lower my per share cost to $25.15. When it had this pop up to $95.54 back in October, I decided that when it tried for it again in November, it was time to pull all the remaining capital out of the position. So on November 5th at $93.74, I made a significant sell, lowering my per share cost to negative $2.29 per share. A negative per share cost means I took all of the capital out of my position, and instead each share adds $2.29 to the portfolio's bottom line in addition to the value of the share. And from here, since I had the capital out of the position, I decided it was really time to let Logitech loose. After Logitech hit its all-time high at $140.17 and pulled back to its 200-day moving average, I decided to put capital back into the position on August 2nd with a buy that went through at $108 and gave me a 40-cent per share cost. About a month and a half later, when Logitech broke down even further, I made another buy at $94.90 on September 17th, which raised my per share cost up to $2.65. cents. A few days later, on September 30th, I made another buy at $88.86, which raised my per share cost up to $4.65. And on October 26th, I made another buy at $82.54, which raised my per share cost to $5.84. And that brings us to where we are today with my most recent buy on December 2nd at $78.44, which raised my per share cost to $7.45. This represents a reduction of 69.46% from my first buy back in 2016, and my next price target is at a point of support at $69.55 if Logitech pulls back that far. For me, between Logitech's prospects and the work from home environment and its excellent esports aspect, I really do believe that this is an excellent long-term investment. Thank you for watching. Please hit like and subscribe, and I'll see you in the next video.